Revocable or irrevocable. One gives you flexibility while the other one gives you maximum protection and estate tax avoidance. Today we're going to talk about revocable or irrevocable trust, some common misconceptions about it, what are they, and who should use it, and which one is best for you. My name is Anthony Brister, and this is the Wealth Planning Podcast with Brister Law. Again, today we're going to talk about trust. There's a lot of misconceptions about trust, and really I think the best place to start is, what is a trust? All a trust is a legal document that has a grantor, a trustee, and beneficiaries. Typically, the trust determines how assets are managed to be used, distributed during the trustee's lifetime and typically sometimes the beneficiary's lifetime. Next, we're going to go into what is a revocable trust. A revocable trust, sometimes also known as a living trust, is typically used for estate planning purposes. And we want to use a trust, and I think that 99% of people in America should have a revocable trust to avoid probate. Uh, the revocable trust distributes your assets. You can set terms on how those assets are to be distributed when you pass away or become incapacitated. Living trust or revocable trust are very flexible. That means that you can change these, and they should be changed, especially after major life events. You want to be reviewing this regularly. I tell my clients every 2 to 3 years or after every major life event. A downside to a revocable trust is, and this is a big misconception, revocable trusts do not provide asset protection. Let me say that again. A revocable trust does not provide asset protection. It is there to avoid probate. And because you can change terms, you control it 100% most of the time, you're not going to get that asset protection. Also, a revocable trust does not avoid estate tax. I got that question a lot too. Whatever's in your revocable trust is included in your estate for estate tax purposes. So that's revocable trust. Next up, what is an irrevocable trust? Before I go into that, I'll say this. There is a lot of schemes going around, a lot of bad actors that sell irrevocable trust to the public. I would just be kind of weary for most people. If you're getting pushed an irrevocable trust, definitely talk to an attorney. If the person pushing the irrevocable trust is not an attorney, I would act very cautiously. Irrevocable trusts do not avoid tax. That's a common scheme I see, talking about extraordinary dividends, avoiding tax. Just doesn't work. Unfortunately, there's sometimes ways to defer the tax, but completely avoiding the tax, no. And 99% of people do not need an irrevocable trust. So, taking a step back from my spiel, what is an irrevocable trust? Well, an irrevocable trust is a trust that once you put the terms into place, you cannot generally change those terms. These typically are used for the ultra high net worth, ultra wealthy people. And the purpose there is asset protection, one, but also to avoid estate tax is the biggest reason. Typically, once you fund an irrevocable trust, after 3 years, whatever's in that irrevocable trust is no longer in your estate. The problem with the irrevocable trust is that they're not flexible. So once you put these terms into place, becomes very hard to unwind it. Now, there are certain cases where you can unwind it, but we won't go into that today. Typically, you're not going to have that flexibility. You will get the asset protection because, again, you don't control it. And it avoids estate tax because you don't control it. In the eyes of the IRS, is no longer in your estate. Now, I will say that a couple common ones that we might use an irrevocable trust for is a special needs trust in certain situations, and then also an ILET, an irrevocable life insurance trust. Um, right now, the estate tax is very high. It's around 25 million if you're married, and around 12 and a half if you're single, currently in 2024. Um, so not a lot of people really need these irrevocable trusts. In 2025, that exemption amount is supposed to be cut in half, and there's been talks of it dropping as low as 1 million per person. In that case, the irrevocable trust might be more relevant to a lot more people. Um, but again, if you are under the estate tax, or even really what it's supposed to drop down to in 2025, you probably don't want to put your assets in an irrevocable trust because you want to maintain that control and you want to have that flexibility. Again, 99% of you don't need an irrevocable trust. Only time really you should consider it is for special needs cases, or you're pushing up to the estate tax. And even if you're getting close, there's other methods like gifting, um, being charitable, family limited partnerships that can go a long way and still give you a little bit more flexibility and control than the irrevocable trust. So, which one's right for you? Well, like I said, 99% of you guys need a revocable living trust. Just about every American needs a revocable living trust, and that's to distribute your assets and avoid probate. Uh, the majority of you guys do not need an irrevocable trust, unfortunately. Even for the asset protection, there's a lot of other ways that you can have flexibility and control before you start thinking about putting things off in an irrevocable trust. Lastly, 5 common myths and mistakes that I hear about trust. I get these a lot, so I figured I'd throw this in here. The first one, most common mistake I hear is trusts are only for the wealthy. Again, 99% of you guys need a revocable living trust, and that is to avoid probate. If you've got assets, if you're an adult, you probably need some kind of estate plan, and a revocable trust typically is a better way to go. The second really mistake that I see people making is having a revocable trust, but then they forget to fund it, or they don't even know what funding the trust means. So just drafting the document, the trust document, isn't good enough. You actually have to retitle assets into the trust. So for property, that means drafting a deed. For financial accounts, typically that means updating beneficiaries or updating the account holder. The third myth that I've heard a lot of people say is, if I've got a trust, I don't need a will. That's actually wrong. You should always still have a will as a fail-safe. When we draft our revocable living trust here at Brister Law, we draft a pour-over will too. What the pour-over will's job is to push anything that you forgot to retitle to the name of the trust into the trust. It's there as a fail-safe and to catch any asset that you may have forgotten about or inherited from a crazy uncle, right? So the pour-over will's job is to push everything into the trust. If you don't have a pour-over will, then you're going to have to go through intestate, which state law decides how your assets that are left out of the trust are going to be distributed. So most of you don't want that. It's better to have that pour over will pushed into your trust, or will that determines any residue that's outside of the trust. The fourth mistake that I see people making with revocable trust is they're not updating it after big life events. They're not reviewing it regularly. I've had some older clients that came in with 40-year-old wills. We've had judges come in who's had a trust for 20 plus years, and they didn't review it. They never funded it. So they've been going on for 20 plus years thinking they've had a proper estate plan. And what really they've had is just a very expensive paperweight. So you want to review your estate planning documents regularly. You want to make sure assets are titled correctly. You've updated beneficiaries. You want to make sure that these documents say what you want them to say too, right? People get mad at children. Seen it all the time. Something happens to somebody, life changes, people mature. There's a wide array of things that you should regularly be checking and making sure your trust reflects your current life situation. And then finally, the fifth and last thing that I see people make a big mistake on is choosing the wrong type of trust. Like I said, almost everybody needs a revocable living trust, but a lot of people are getting sold on irrevocable trusts, and they're paying $20,000-$30,000 for an irrevocable trust package for asset protection, and they're getting sold on avoiding tax when they're misinterpreting the tax code. These people generally aren't lawyers doing it, so they kind of look at one section of the tax code, try to take advantage of that. The tax code isn't a vacuum. You have to look at it all, plus regulations, court cases, all of that. Again, unless you're ultra high net worth or you've got some kind of special needs beneficiary, typically you don't want that irrevocable trust. Now, come 2025, estate tax gets cut in half. A lot more of you guys might need these irrevocable trusts or some more advanced estate planning methods. So keep in touch with your net worth, how much the lifetime estate exemption is. And if you're butting up against it, definitely talk to an attorney, come up with some advanced estate planning tactics, because a revocable trust is only there to avoid probate and distribute the assets. Once you become up to that estate exemption or over it, unless you want to pay a 40% tax on anything above it, you want to do some advanced estate planning. So whether that's gifting, family limited partnerships, or an irrevocable trust, talk to an attorney. Make sure you get sound advice. This is the Wealth Planning Podcast with Brister Law. Have a good day, and don't forget to like and subscribe.